Hi everyone, it's Hannah here again. So it's 5 p.m. on Mondays. That will be one of the best days of the week because it's starting of the week. And then I know people, when they go to work, it's the first day of work. Some people have the bit blue, but it's for me, it's the best day of the week. I'm my own boss, so I do enjoy it, and I always look forward to have this 5 p.m. Monday show to answer questions. Okay, today's topic, because yes, people ask me, I do work with medical professionals, and there are a lot of people ask me, do you help people like medical professionals or healthcare professionals who are starting a business? My answer is yes. Of course, when you start a business, it's important to get your tax right, get your business structure right, so you can be tax efficient and be legal. And in fact, when it comes to like the medics, of course, most of the cases it's more of individual advice. But what I find is for the ones like advising startup, like in the healthcare industry, in this healthcare space, doesn't matter if you're running your private practice or you're starting something else related to health, then that's something really close to my heart. It's basically because, well, of course, for me, myself, I am a business owner. I've been running this business for 3 years, and I know, especially starting up, how hard it is. And if you are looking to start up business, I know it's basically not for everyone. It's a lot of hard work. But then what I've realized is hard work does pay off. And because I think earlier on in the episode, I showed you the 4 cash flow quadrants, like employee, self-employed, business owner, and investors. And there are 4 different types of income, like people, how they earn the income. So it's basically being a business is one of the ways that you can get unlimited earning potential, and also eventually things will pay off. When your business is paying you dividends, then you really don't have to work like that hard. You still work, but it's like work you choose to do. It's not you have to do. And also, as business owners, you do have very like more tax breaks. Actually, today, of course, like as a business owner, you can claim a lot more expenses than normal employee or self-employed. But today we actually focus on something really sexy, and perhaps lots of people don't really know about. So let's just get started. Okay, so first of all, if you're starting a business, okay, if you are like previously you're an employee, you have a job, you have a salary, have a steady paycheck, but if you're looking to start a business, lots of people have this misconception that when they have to register as self-employed, when they are officially self-employed, it's actually some people saying I'm not making any sales, so I'm not yet self-employed. But it's a misconception. The day you start being self-employed is actually the day you start printing your business card. You're in position of your promoting your business. You actually start spending something like some marketing expense, then in position of having a product or having a service that in position of promote it. So that's a time you're actually officially self-employed. It's not necessarily the day you actually make a sale. And when it comes to registering the self-assessment and filing the tax return, that's a starting date. Of course, some people will think, filing self-assessment, that's something new, and that when they starting out, they haven't earned anything yet, haven't made any sales yet, and I don't have the money to afford an accountant to do it. But in some cases, it's not really like this, because when you are making a loss, and at the same time, in the same tax year, you have income through a paycheck. Because when you have received a paycheck, you already pay tax before you get paid. So eventually you can use the trading loss, like a startup loss, to offset that income. And in many cases, you do get the tax back. You do get some money back. So doing the self-assessment at that point is well worth it. Okay, so you're welcome. Okay, so yes, the starting date is you in position of promoting your services or products. It's not a day, it's not the first day you made the first sale. And in many cases, it's well worth doing that because you do get the tax back. And what makes it more like sexier is it's not necessarily say the day you start printing your business card, not necessarily from that day the expenses you incur you can put through as a trading loss. Even if before you start promoting your services or products, you might spend some money in market research, or especially if you are a product-based business, then you might have some materials, or if you're a food industry, then you might have some ingredients and doing the market research or do the testing. So you'd have spent money related to a business. And by law, you are able to claim those expenses as well. And the time scale, guess what? Is 7 years. So within 7 years, so 7 years prior to the first day of your trading, prior to the day that you start printing your business card or marketing materials. So you actually can claim quite a bit of tax back at that point. So it's actually well worth it and well worth keeping all the records that are related to a business. So of course, if you are not earning anything at the same time, you can carry forward the trading loss, then offset the future trading profits. So it's actually doing that, you can actually save quite a bit of money. So that's when you get self-employed. Of course, for lots of people, when they say if that's worthwhile, when they are in position of transferring their business into a limited company, that's a really good question. As we can see, like being self-employed, then at the beginning, if you're not earning any money, that's probably well worth it doing it, because if you're at the beginning, you already have a limited company, you cannot actually use that company loss to offset your personal loss, because these are two different things. But there are some exceptions. For instance, if you're seeking for investors, because you do need to issue the shares. Especially if you're looking to invest in the company, you have to have the company as a vehicle for investors to invest in the money, to hold the shares, to give them the equity. So that's an exception, that if you're looking for investors, especially if you're like a tech startup, if you need like investment funds, then you do need a sort of limited company structure. But otherwise, if your startup setup is simple, if you're more of a bootstrap entrepreneur, like you might have a bridge job and at the same time you start a business, then being self-employed at the beginning, that's a better option. And of course, if you at a later date, if you're earning more, if you're being more profitable, then it's well worth setting up a limited company, because from April this year, the company tax rate is only 19%. And by 2020, it will be reduced to 17%. So the tax rule is actually in favor of small businesses. Of course, at the same time, the government is trying to increase the amount of dividend tax. But again, dividends, one, it doesn't trigger for the national insurance. And two, you still have some sort of tax-free dividends. Of course, like from next year, it's not that many, only 2,000 per year. But like a dividend starting rate, that's only 7.5%. So that's still well worth it. So, but of course, if you're in that position, do speak to your advisor or accountant to really look at the figures and see if that's really worth it. Sometimes it's worth getting things done on paper or by number. Okay, so that's actually when you start a business, that's something you can play around. And also, some people were saying when they have to start registering VAT. That is a very good question. Actually, VAT is a very big topic. We can probably cover it in one or two sessions. It's actually a very complicated kind of tax, because it's more of a sales tax. It's not something that you pay directly to the government. It's, if you're registered VAT, you register as a tax agent that collect tax on behalf of taxmen. So it's some sort of indirect tax. But when you have to register, of course, first of all, check if the type of a business you are in, that sort of a service or products that need to register VAT. For most of the healthcare service, like if the primary purpose is to restore human health, then that's not something you should register for VAT. But for many other things, like if you're selling some healthcare products or drugs or materials, you might need to register VAT. Currently, from the new VAT threshold is 85,000, but even if you're under that, you might need to look into it if that's worthwhile for you to register, even if at the beginning you don't make any single sale. But in the case that you buy a lot of materials or equipment that incur a lot of VAT, then you might be able to register it and get a refund, get a VAT back to aid the cash flow. And the beauty of this is, by the registration date, you don't have to, the amount you can claim doesn't really limit it to the registration date. You can claim backlog it. For the services, you can claim last 6 months of services. Say, for instance, you registered VAT on the 1st of June, but the last from January to June, prior to that, you paid the accountant to do the work, and they charge you VAT. Then you can claim those accountancy fee, like a VAT on accountancy fee, and get the money back. And for the products, especially equipment, you can claim back for 4 years, but the condition is on the registration date, you still hold that piece of equipment, or you still have that stock, if you have that physical goods in stock. So that's a condition. But of course, if that's for you, then you actually can claim quite a bit of money back. So that's something I think, like a backlog or pre-trading thing, that's many businesses, they might not realize they can claim it. And also, actually, these are very standard. These are not like a loophole. These are very vanilla flavored tax breaks. But actually, one of the best things, if you are the startup and if you are involved in research and development, that's actually one of my favorite and one of the most sexy tax breaks you can have. That is, if you are involved in research and development. In particular, in this healthcare space, if you are developing the application like a health technology, or if you are developing a drug that cures cancer, and it's very like something, even if you are the best professional, like most competent professional in this area, you might face the uncertainty that the drug you develop cannot eventually cure the cancer. But you do actually invest a lot of money and materials, and you hire the people to do the work, to do the research and development, and to testing the drugs. So the money you spend, actually the government give you the most favor on this. Every £100 you spend, government give you £230 as a tax relief. So what does that mean is, of course, the hundreds, normally if we have the expenses spend £100, then we can claim as the expenses at £100. But the government enlarge it if that's related to that kind of research and development by 130%. So enlarge it. So if you spend 100 and you can put 230 to offset your tax. But then that's as a form of tax relief. And also the beauty of it is you can claim you can leave it as a trading loss and carry forward to offset your future profits. But the other thing you can get is actually you can convert it into the form of tax credits. You can actually get the physical cash back. Because I know normally, like say, the clients we helped before, they do spend a lot of money in the research and development. Like it's a piece of technology, but then they can claim they probably spend like 800,000 or like millions. They spend a lot of money in it, but they claim about $250,000 back in cash from the government. So you can actually surrender, like convert this kind of a tax relief into the credit and get the physical cash back. And at the back end, you can again fund your business and fund your cash flow. So that's actually one of the most lucrative tax breaks that a startup can get. And of course, you have to meet certain conditions. As said, if you're like, if you are the company that do the research and development in order to develop a drug to cure cancer, and there should be an uncertainty in that. And also, it has to be something that you improve the overall standard, like a technology advancement. You improve it. You develop something new, something innovative. So you need to have some element on it. But of course, the most important thing, we need to persuade the taxman. We need to explain why it is something that is like innovative, there's an uncertainty element in it. So we really need to get these things right, and also there are a lot of details, like some expenses you can claim them in full, some expenses you can probably claim a portion of it, and what you can put through, what you cannot, and what paperwork you need to put together. So in this sort of sophisticated tax credit, really need to work with a professional and really need to look at what are the details, because I think the purpose of this is to make people aware of this, because apparently a lot of startups, like especially in medical, like health tech, this kind of like lots of startups, they are already doing research and development. They probably already doing this type of research and development that face uncertainty, but they might not be aware of this tax break. So really sit down with a professional, the accountants or the advisor who are aware of this R&D, who has done it before. So sit down with them and look at your financial statements. Something even like if you hire the space in order to do the research, or if you have a utility bill that you incur that related to this research, these are the expenses you can put through. So qualify for that tax break. So really, I think the purpose of this is really make you aware, but in terms of how you can go about claiming it and what are the details, really sit down with a professional and to look at it. So having said that, today we focus on three like lucrative, some sort of tax breaks, some tax credits, like 3 ways, like no-brainer, you can get some money back. Of course, if you're just joined and later you can do the replay. And this good news is all our Facebook Live going forward will also convert into the podcast. So that doesn't really limit it to the YouTube or Facebook or online. You can download them on your device and you can listen to them on the go. So really get the education, because I really want more people to be able to look after themselves, like financially. That doesn't mean you don't need to work with a professional anymore. That actually means you can work better with a professional, because you are aware of what they are doing that for you. And it's the same as medical professional. If you're having a doctor, if you're looking for your own health, you are eating healthy, exercise, looking after your own health, that doesn't mean you don't need a doctor at all. That only means you are aware of, like when you're having problem, you're looking for them, you know what they are doing for you, not blindly relying on some advice. So that's actually enable you to work better with a professional. So after this, like the podcast will be released in next few days. And if you do have any questions, be free to shout. And if you do have any comments and how we can make this episode better, and then please be free to PM me. Okay, so basically these are 3 best tax breaks that when the startup you can get. Yeah, but of course I think at the final notes, at the moment the theme of this month, actually the next few episodes I already planned out. It's more for the businesses, like for the people who want to step up into B quadrant, like from employee or self-employed into a business owner. and especially most of my audience, they are medical professionals. I think one thing, I'm an accountant working with this type of profession, and of course, I've been nosy. Please forgive me if I've been nosy. My news feed has been lots of posts about medical professionals, and in particular, I think I'm following one of the Facebook page that's called What a Bleep. It's actually some of the news is actually sometimes I can't say when they review like some videos or some articles like what's a working condition with a medical professional, especially at the moment IR35 thing affect the trust, like hospital doctors. There are people pulling out like the lack of workforce, and it's basically some news was saying because of IR35, there are more and more locum pulled out, don't want to work for the hospital anymore, and they are facing a sort of shortage of workforce, and their doctors are required to cancel their annual leave and give them more pay. But it's actually, I think, on the surface, of course, we need to look into what we can feeling this shortage of workforce. But deep inside, I think it just, in my opinion, this system they might need a change of this whole system. And I do believe, I do quite often hear the news that junior doctors they are overworked or even like overstressed, because this type of work, I know, it's people's life. Like for accountant, if we do anything wrong, clients get a penalty. They still have a life, but I know for you guys, it's people's life. I know how stressful it can be, and I do hear, it's not once or twice, I do hear the news that there are doctors facing all this stress and committed suicide. Yeah, I do feeling that for you, and I just feel like because the medical professionals, you are the ones supposed to save people's life, but who will be there to give you guys a life back? So yeah, I don't have the best answer, but I would say the reason why advising the business, like for people like medical professionals from employee to a business owner, it's most close to my heart. That is because one thing, being a business owner, of course you need to work hard, but that's one of the ways enable you to really save life. But at the same time, you can have a life as well. You can be savvy. You can look after yourself as well. And the other thing, like a lot of healthcare technology, this kind of thing come up. And really, I think it's a way forward, because using the technology, actually, you enable to make the healthcare system like more efficient, and like not all the doctors, they don't have to like overworked or underpaid, facing all these like committing a suicide. So really, I think being the business owner, either you are setting up a private practice, or if you are developing a technology or developing a drug to cure the cancer, that's really moving it's one of the best way to move the system forward. And at the same time, you can have a life yourself. So if you do have any questions about the businesses or anything, the tax, be free to let me know. Or if you do have any suggestions or have any opinions, I know I've been nosy, but if you do agree, that's great. If you don't, that's okay. Just some accountant being nosy. Okay. And just to give you an idea, because we're gonna talk about the business quite in a few episodes. Next week is our Easter Monday, and I'll be nice to you as well. Easter Monday, we're not going to talk about tax, not going to talk about financial planning, but because, as I said, I've been a business owner myself, and I've been through the journey that growing a business, I know how hard it has been, but at the back end, I do have a great mentor. If not because of him, I probably go back to my old job or go back to contracting. So he really kicked my ass and really get my business off the ground. He's my sales consultant, so next week we're going to invite him to our interview. And for you guys, if you are looking to develop your business, in that episode, I just mainly is to share my story, but he actually worked with a healthcare business, like private practice. So he will share some idea how they can help you earn more money as a business owner. So I hope you enjoy this episode, and the podcast will be released in the next few days, as well as a newsletter. So if you do have any questions, please be free to let me know. Okay, so have a wonderful, wonderful evening. Thank you very much.